Hey everyone, it's Zach with Palantir Research. Q2 2023 earnings are coming out shortly at market close on Monday, August 7th. So that's coming up pretty quick. There's a lot of excitement around this earnings for investors to see if there's any inklings of AIP and the general AI hype actually affecting the business of Palantir in a positive way. Now, if there is no effect, that obviously would be a negative for them considering all the price movement in their stock, meaning there is some expectations of them winning from this. Now, I'll go over what I'll be looking out for myself and my thoughts on all those. So just remember, this is my own opinion and not advice. So first is customer count, and more specifically, commercial customer count. Now, for their trailing 12 months ending Q1 2023, they had 391 total customers, with 280 of them being commercial. So we want to see how much of this is increasing, because Karp has even mentioned in his interview with Bloomberg during AIP that they've received a year's amount of inbound interest in a single month when they announced AIP. So now, of course, nothing is guaranteed there, and he didn't give any specifics. But if you're willing to say that much publicly as a CEO, you'd hope that the CEO is confident in delivering on expectations of some outlier growth in the next customer count here. But one warning here for investors is that the quarter ended on June 30th, 2023. So even though you're getting a bunch of inbound interest on the phone, the time to actually close the deal can affect this. So even though you're getting a lot of inbound interest, it doesn't necessarily mean that they're going to fall into the time period that Q2 is covering. And then this perfectly segues to the next item I'll be looking out for. It's their revenue growth. Now, I'm not expecting any huge beat in revenue, but rather I want to see if that growth rate in revenue is in comparison to last quarter decreasing, maintained, or improving. For Q1 2023, they had 18% year-over-year revenue growth. Now, if Q2's year-over-year growth is another decrease below 18%, that's definitely disappointing in my books because of the continuing trend downwards. But if it's at least maintained or slightly above here, I wouldn't be too worried then, since customer count, though, is still going to be the preceding of this metric doing well in general. So I'm going to be looking at customer count first then, and then that's going to really set the expectations on what I should see for revenue. And we just never really know, especially with these small trial periods for customers. They might be getting just a small amount of money there and then scale it up later. Now, overall for revenue, it can still be a mixed bag, especially if international revenue growth, especially on the commercial side and government side, is still falling behind. But if they show amazing US commercial revenue growth, I'll be a little more forgiving and patient there. We'll just have to see the magnitude of that. But the big thing to remember as a longer term investor, the nature of Palantir's deals are more sprawled out over longer periods of time. So especially when customers are on a trial basis, there's really no revenue there to be recognized. So the most telling before revenue is still going to be customer counts, like I mentioned in the first part. Now, the next item I look out for is still on the income statement, and it's going to be the growth of revenue versus the growth of their cost of revenue. So I want to continue seeing a widening gap between revenue and cost of revenue. So for example, if revenue is growing 18%, while cost of revenue is only growing 10%, there's a gap there. But if they're both growing in sync with each other, then that's not really a good thing I want for scalability, because this is an indicator of that for their business if they're truly scalable and if their expenses can really fall behind when they're growing their revenue. But also taking this a step further and seeing their income or loss from operations. So basically, when you're adding in those marketing and sales kind of expenses, after you've done that gross profit there, you want to see what's left at the end of the day. So last quarter, they eked out a tiny $4 million profit from operations. So any help from this will trickle down to their GAAP profitability. Now, we know there are a ton of treasuries on their books for Palantir, so this, of course, is where GAAP income is going to be most affected by. But if the base of that calculation, which stems from income from operations, does poorly, this means that interest income will have to make up for the shortfall, which, of course, is okay if you want to reach GAAP profitability or just barely make it. But in the long term, as a shareholder, I don't want interest propping this up and being the only reason why that they're profitable. And this segues actually perfectly to one of my quick checks, which is what is the cash and debt positions of the company. Now, of course, this has not been an issue for Palantir at all. You can look back to a lot of the quarters. I'm just curious to see if they've decided to take on any debt or use their revolving credit line or even use their cash pile for something other than treasuries. I'm not saying it's bad that they're taking advantage of high interest rates right now, especially with treasuries paying around 4 to 5%. And if they expect rates to slow or even pause their rising in the near future, then I guess it's a good decision to do so. It would just be something notable to see if management thinks they're able to achieve a rate of return much better than what is guaranteed in the environment today. I would much rather be more vigilant too on this spending if they decide to use the credit line instead of cash too, because that would be a sign to me that they think they can really make it pay off because it's such a different behavior from what they've been doing for years. So we're going to see that, of course, on the income statement here if they have any increased expenses for anything. But I'm just curious to see if they're trying to get a higher rate of return on their money than what is just being given by the government. And lastly, my favorite is their cash flow from operations. I'm obviously biased, but this is important to me for the long-term health of a company. Are they actually able to produce cash from their business, or is this needing to be propped up by selling assets or raising money, which of course would show up on the investing and financial activities respectively? And I basically look at all the line items to understand their operating cash flow, but most notably, what a lot of investors are hypersensitive to on the stock is their stock-based compensation. How much of Palantir's cash flow is depending on their SBC as a crutch to maintain this healthy balance sheet? We want to see this continued decrease over time, but know that we're getting the best and brightest definitely requires some of them to put their own skin in the game, and knowing that they're going to have that kind of outsized reward based on the stock price is going to help and of course reward their contributions. Now, I know there's going to be a lot of mixed bags on this for investors, especially on the acceptance on the level of stock-based compensation, but I just need to see for myself personally a continued downtrend here, with obviously more reduction being the better part. So the overall big picture for me, at least for Q2 2023, is that I'm not expecting a huge beat here, even on the revenue side. I really just care about the customer counts because that's going to see how much they can convert and how quickly they can convert from that inbound activity they're getting from AIP. Now, what would also be interesting too is if they give a breakdown on the different products here. If we do see some growth in Apollo, because we have been seeing some press releases about that, and of course a presentation from AIPCon from Cisco using that, I think it would be great to have an idea of what size of the businesses these products are bringing in. Now, if AIP is going to bring in more Foundry customers, because you kind of need that ontology set up, and then you need to have all that analysis and all those things there before even using AI, I think it'll be really good for investors to see how sticky they can become, and if there's even a way for current customers on Foundry and how they're going to be converted to AIP or add on AIP. I think the biggest here is to see the scalability of Palantir within an organization, not only just outside of the organization. I know we focus on those network effects there, but if you can spread from one department to another, and then you can give more and more products and modules to them, that's going to create usage and stickiness and more value to the platform over time. And it kind of has this compounding effect overall for their products and, of course, for the value that customers are getting out of Palantir. But that remains to be seen. I know they don't necessarily give as much detail as investors would like on these kind of details here. And I know it's going to be holding to certain numbers. So it's not something that's going to be best practice as well. But what are your thoughts on all these metrics I went over here? Are there things you really want to make sure the company is performing on specifically for Q2 2023? Let me know below, and I'll see you in the next video.